the market went bananas, and we were able to raise that rent by over 50% a year and a half later. And so that negative cash flowing property became a significant strong cash flowing property just a year and a half to 2 years later. And that was the aha moment for me. Like for me, I'm just like, hey, listen, look, there's money literally going into my pocket every single month.
Thank you everyone for joining us for another exciting webinar, Real Estate Investment. I really appreciate you coming and taking time of your day and investing in yourself actually. So my name is Ashton Ekbatani. I am the founder of this webinar. Actually, it's a real estate club that because of COVID, we had to go to Zoom, and that was a great thing happened to us because we are saving time and gas and going from distance. Now I can invite people from all over Canada to come and help us with understanding better of different strategy and how to do real estate investment. So in bracket was a blessing to not having COVID, but to use the system and the technology for our benefit. I'm going to go through my, I have to use my key here. This is the presentation I have here. The reason for, or the goal for this real estate investment webinar is to learn and to get inspired. We hear different stories, how people started from where they were and where they are right now. So it can easily inspire us. We also try to build and encourage and build the portfolio that we have and help others. And at the same time, one day we have to repeat the same thing. We extend our hands, someone else is going to help us as well. So it's both ways. Now, what we are trying to do here by every Wednesday is to help all of us to move from where we are as a speculators and as someone that doesn't have enough knowledge of real estate investment, being blown away to the right and left by all kind of news, to get somewhere that is we are solid. We are working on numbers, so we are not guessing or hoping that our real estate investment is a solid one. So we need all this information and knowledge to get there. This is my YouTube. I hope you go there, and there are plenty of videos that I recorded, and some of these webinars are all there. And please subscribe to this because very often I put different clips, different videos, educational, so you can go and learn more. And here are some of the previous webinar that we had. We invited people. Now we learn fixer-uppers, multiplexes. There are conversation about USA market, investment, bear strategy, startups, buy and hold, etc., etc. I'm the author of many books. Here, 2 of them, and particularly Successful Real Estate Investors is one of the one that I'm really narrowing down to all the strategy that we can use to buy a very successful investment and go on from there. Now, take a look at the Toronto market right now, the housing market. And I'm going to tell you what's going on right now. These are like today's information. Now, Toronto market, as you can see, we are in the month of May. I have the previous months that are, the data is prepared. So look at 2021, and these are the sales that happening. It has nothing to do with price. So, you see how crazy the market was starting from January all the way to March and April, and still May is there as well. Now remember, closer we go to July, higher the inventory would be. So that is going to reflect on many things, including the number of transactions that's happening every month. Now here is the average resale home price. That's where you are. If you're curious about what's happening with the price, this chart would help you to understand what's going on. As you can see, the market would never slow down or crashed or price adjustment. They continue going up, and you can see April and May happen the same thing. As a matter of fact, yesterday I saw a house. I'm a real estate agent as well. So yesterday I was checking one house. Today is a detached home, but they were asking for 1,300,000, and so far they have 12 offers. Now this is total residential transaction year over year. Last year in April, we had 2,900 transaction. Now this year, compared to last year, we have 13,000. Now remember, the Toronto Real Estate Board, they are looking at numbers, transaction, and in GTA, we should, based on the last few years, we should have anywhere between 90 to 93,000 transactions happen. So we are very much up to date and in the right course with the number of transactions happen. The right chart is showing us the average selling price, as you can see, compared to last year, 33% went up the price, which is crazy. Now, of course, many of you know this chart is the home price index starting from 2011 going up. Yes, there is a slowdown, but as a real estate investors, I am buy and hold person. So I buy and hold. I'm not looking at the hiccups that we see every few months here and there. I invest in the right property. I know the return on investment is 8% or sometimes 10 or 12%. So I just let it go, I rent it, and I enjoy the growth after 5-10 years if I need to sell it. Now, some of the questions I came across is what's driving up real estate price in Toronto? Clearly, for all this situation that we are facing with COVID pandemic and so on, just for the government to boost up the economy and not freezing it down is working with interest rate. Of course, if the interest rate is so low, then that would stimulate the economy to roll, and there are a lot of buyers excited about this opportunity. It's give away money. Like today, I talked to a mortgage broker, the interest rate 1.2 variable. That's amazing. So that is one of the reasons. And also there are investors, there are active people that it's timing for them. There are some people thinking because of COVID, people cannot go out shopping and or spend their money. They are thinking of buying real estate investment, which I understand, and I've seen that every day. Now, is the Toronto real estate market cooling down? I don't think so, because we haven't finished with COVID. The economy is not that strong, so government start helping to roll this economy using real estate. And as you know, real estate is connected to many other things, such as construction, inspectors, lawyers. They're all going around real estate. So we need that one to continue. So would it cool down? Maybe the number of transactions varies, and that's typical every year. But in terms of price, as long as the interest rate is low, that will continue. Will Toronto housing price drop in 2021? Based on what I see, no. On 22, they said the interest rate would not fluctuate very much, would not go crazy. So we are expecting 2022 also continue, might not be that crazy, but it would continue going up. Now, today's webinar is all about raising capital, where to find money. And I invited Micheal, sorry, I forgot your name, Ponte. Is that correct?
That's correct. Yeah, that's
all right,
me.
And that's you. Excellent. Before we get to this webinar, this conversation, where that picture is coming from? Were you skiing or?
Yeah, I was actually snowboarding. There's a long, big, long story behind that one, but yeah, I was snowboarding up in BC here up at Cypress Mountain, one of the local hills. So
is that what you do very, very often?
I do. That's one of our winter activities that we love to do. So our family is big skiers, and for myself, I'm a snowboarder, so I love it. So
excellent, excellent. Thank you, Micheal. So without further ado, I am going to ask Micheal, who has an ocean of knowledge in real estate investment. I'm going to ask him to tell us a little bit about his background, where he's coming from, how he got into real estate investment, and he's going to take it from there. So let me see if I can share my screen with you. I'm going to have you full screen here. Okay, go ahead. All right. Okay, Michael, go ahead.
Excellent. No, so thank you for the opportunity, Ashton. This is great. Welcome everybody. Thanks for taking their time to come out and have a listen, and hopefully I could provide some value and some insight about what's in this brain. And I've been doing this a long time. So for those that don't know who I am, my name is Mike Ponte. I am the president and founder of Prosperity Real Estate Investments. We've been investing for roughly around 20 years. You might also know me from our Facebook group called Savvy Investor. So if you guys are on Facebook, you can definitely check us out on Savvy Investor, where you hold a forum very similar to that format as well. So yeah, I've been investing for 20 years, and very similar to probably a lot of people that are on here today. They may be, just like anybody else. I was just looking to get involved and get started in investing in real estate, and didn't really know what I was doing. 20 years ago, Ashton, I'm sure you probably remember, there was not a lot of information that was out there back then compared to what there is today with Facebook groups and Zoom, and none of that stuff kind of really existed. So it was kind of trying to figure it out in the dark and trying to understand it. But the reality is, when I first got started, it was more of an eye-opening experience that I wanted to diversify my investments, because I think for a lot of people here, they may not have not been so happy with the returns that they had with their mutual funds or their RSPs or something of that nature. And they were just looking for something a little bit different. And, when I bought my property about 20 years ago, my very first property, I was looking at it and I saw how much it appreciated in such a short period of time. And the property tax statement or the property assessment, and then looking at also my year-end statement from our stockbroker, and kind of looking at it, I'm like, I've made more money in real estate in 1 year than I've made in my stock portfolio in many multiple years. And so I come to the realization I need to do a lot more real estate than I do in the stock market, mutual fund market. And it's not a shot at that market, but it's just something that I came to the realization. So anyway, I've been doing this for a long time, started getting involved, started to learn, and just started to buy properties. So I bought my very first townhome many, many years ago. It was a negative cash flowing property, losing about $40 every single month. And then just kind of really started to slowly scale from there. And then for myself, it kind of got the bug, started to kind of grow. I saw what the opportunity is and where I was able to generate cash flow over a short period of time, and just started to grow. I started to buy multiple properties, and then kind of getting to a point where, I started to run out of money. I don't know if anybody here is in that same position today, where they've bought 3, 4, 5 properties, and all of a sudden the bank says, okay, Mike, that's it, you're done. You can't do anymore because we're capping you off. And you're like, but I still want to buy some more property. I still got some more money. I still want to do this. And so it's trying to find different ways to kind of get involved. So I guess 20 years later for myself, started to kind of bring in joint venture partners, started to continue to grow and started to expand. And I know we're going to be talking a lot about joint venture partnerships today, and how to find it, and what's the best way to present, and all those types of things. But for me, that's where my business has grown. And so currently we manage over 175 units literally across the country. We invest in Fort St. John. I got properties in Calgary and Edmonton, got properties in Halifax, and also in Moncton as well. And most of our properties we've got a big portfolio, portfolio in multifamily apartment buildings as well. Our area of focus right now is more on the multifamily side, but I'm not ever shying away from the residential side. So for us, joint venturing and raising capital, which is kind of today's discussion today, has been instrumental in regards to the growth of our business. And, also at the same time, we talk about it, and Ashton, I apologize, but probably have not seen one of your presentations, but I would imagine for a lot of people, it's really understanding what your goals are and what your vision and what your why is at the end of the day. And for me, my why is to be able to spend more time with my kids and my family, and being able to kind of work from home, even though it's a COVID reality, but it hasn't really changed too much for myself. But that was always my vision. That was my goal. And that's where I wanted to strive for. And so this is what real estate has been able to provide me, is giving me that flexibility to do that. And also the income to support my family. But more importantly, it just gave me a lot of my time back. So, that's kind of me in a nutshell. Ashton, been doing this a very, very, very long time. Raising capital for over 15 years for sure. And so got a lot of experience, got a lot of knowledge in regards to that too. So hopefully that's a not too long of a summary of myself. So
excellent. Thank you very much, Michael, for
You're
sharing.
welcome.
How did you feel like going from like not having a real estate investment property and start thinking about the first one? Should I buy the first one? Should I buy? What should I buy? Did you go through that questioning yourself and fear and hesitation and, tell us more about it.
Absolutely. I think for everybody that's got started, their first deal is just like anything. It's the scariest one that there is. It's very natural. And just so you know, the first deal, we actually walked away from it, to be frank. And so we had an offer accepted. It was a small townhome in Edmonton. For those that don't know, I'm based in Vancouver, as I think Ashton introduced me earlier. But my first property was in Edmonton. It was a townhome, 3-bedroom, 1.5 bath with a finished basement suite. And I want to be really clear. I didn't know what I was doing. I just kind of was going in, and God bless my wife. She was like, Mike, I trust you, let's do it. And she was very excited, even though I was extremely scared and really nervous because I didn't really understand what exactly I was doing. And so here we are, we bought this property, we got it under contract, and we go out to go view the property for the inspection. And the inspection came out that the furnace was kaput, needed to be replaced. And catch this, the seller was saying, hey, Mike, you know what, we'll pay for the furnace, that's fine. But as we did the walkthrough, we saw cable wires, like TV cable wires, from room to room to room, and they were all stapled to the side of the wall, going from room to room to room. And so we're like, oh my God, this is horrible. But you know what, this was not a really big fix. Like, it was just really removing them and repainting the house. But because of cable wire, we actually walked away from that deal. Okay. That townhome many years ago was $79,000. Okay. For this 3-bedroom, 1.5 bath. Today, it's probably pushing a little over $230,000, somewhere in that vicinity. So I literally walked away from a property because of cable wire and lost all that equity because of TV cable wire. And it sounds so stupid, but that's where fear gets in the way. We weren't using this, our brains, instead of using this, right? And sometimes we get very emotional when it comes to real estate. And this is where, I would imagine, Ashton, you teach this too. It's just like, it really is about the numbers and having an understanding of that and having clarity to what those numbers are. And if I would have just stayed focused on that, I would have never walked away from that deal. Now, in the same breath, shortly after, I did buy another one for almost the same price. So I feel a lot better about that. But I still always remember that as my first experience to understanding that, you know what, you got to use your brain when it comes to these types of things. You got to overcome your fear and get over the emotional side. And if the numbers are making sense, and for the cost of these smaller repairs and small little things, it still makes sense, then you got to push forward. Fear is the biggest obstacle for a lot of investors in regards to overcoming that objection. It's so scary. And this is where you come to networking groups and events like this, where you can kind of like reach out to people, talk, share some of those knowledges and experiences. And for those that are just getting started, don't worry. You know what, guys, we've all been there. We had to go through that first obstacle, that first step to acquire your first deal. But once you've overcome that and you get your property rented, and the dust settles, it's just like, you know what, that wasn't really that big of a deal. But it's just that build up to that point. And I know for a lot of investors, scary time. But that was my experience back then. And like I said, it's one that I know a lot of investors feel every single time. So
great. And you said on your first property, you were going negative cash flow. wasn't it a negative move for you or hesitation? Or when you talked to your wife, you said, well, you know what, it didn't work out, forget about real estate investment.
Yeah, you know what? It was funny. I had a different mindset back then, Ashton, to be honest, because again, there was not a lot of information back then. And
Mhm.
so I didn't even know what positive cash flow was, to be frank. I was able to run the numbers and I kind of knew that this property was going to make me lose $40 every single month. But my mindset at that time was that's just one lunch I'm just not going to eat every single month. So what's the big deal? The mortgage is still going to get paid down. So for me, I'm just like, what's the big deal? I'm going to own a property where the tenant's paying the mortgage and I lose $40 a month. So technically I'm buying a property for $40 a month. Okay. And that was my initial mindset. The one thing about Edmonton is shortly after I bought that, the market went bananas and there's no rent regulations in regards to how much I can raise the rent there, which is a little bit shocking for you in Toronto
I
and
love
maybe
it.
for us in Vancouver as well, because I'm there as well. But technically, I can raise the rent infinite in Alberta as much as I want, right? As long as the market dictates it, but I can. And so we actually did shortly after the market went bananas. And we were able to raise that rent by over 50% a year and a half later. And so that negative cash flowing property became a significant, strong cash flowing property just a year and a half to 2 years later. And that was the aha moment for me. Like for me, I'm just like, hey, listen, look, there's money literally going into my pocket every single month. I just need to do a lot more of these. And that was kind of my first step, is like, if I do more of these, then it kind of gives me that freedom and that flexibility that I was looking for as part of my why. And so for me, I've learned over the many years that I'm more of a cash flow investor. That's my focus. That's what I put most of my attention to, because for me, it is about that nice, constant, steady income stream. And you're right, where you see Toronto and even markets like Vancouver, where there's not been any downturns in quite a long time. But you just never know when that actually does ever come to fruition. Sometimes it happens. It's a very cyclical business, as you're well aware.
Mhm.
And, you know, for me, I got properties in Alberta. If you ask them if the market could go down, they've had, you know, literally 3 downturns in less than 15 years. And so, you know, 2 of them are significant recessions. But what's been able to overcome a lot of those challenges is cash flow. As long as the property is producing cash flow, it doesn't really matter what the markets are doing up and down. Yeah, you may lose on the equity side, but it more than sustains itself, and it's constantly generating income, and the mortgage is being paid down every single month as well.
Excellent. Michael, let's jump directly into raising capital.
Yeah,
I
please.
know at certain point, might be your first home, second home, third home. At certain point, as you mentioned, you put your hand in your pocket and you don't have any money left. So you have to use different strategy. And as you know, real estate investment is all about strategy and do the right one. So tell us at what point you realize that you need more money, and what did you do to start going in that direction?
Absolutely. And great question. So thanks for asking that. But for me, it wasn't actually running out of money. I actually had money, but the banks have literally said, you're done. That's it. That's the max that you can do. And so, and it's all about debt service, as you're well aware. And so as soon as you kind of hit that threshold of 42, 43, maybe you're stretching at a 44%, the banks are going to start to limit you. And if you cap out at around 4 to 5 properties, you won't be able to get any more mortgages. They just kind of cut you off. And that might be for a lot of people that are on here today. And so I got to that point. Now, joint venturing was not something that was in my wheelhouse. I didn't even know what that was. But people saw what I was doing. And when I was telling people that I owned 5 properties, they're like just blown away. They're like, 5 properties, you own 5 properties. And they're like, how the heck did you do this? And they're just like, are you looking at any other deals? And all of a sudden they just started to kind of get some attraction in regards to wanting to partner up with me. And the first people were friends and family to begin with. And so for a lot of people here that are looking to get into raising capital, those are normally the first places that you are going to do. And so I did partner up with some friends, and I did partner up with some family. And so that's how we started to kind of explore and start to acquire a few more properties shortly after that. Now, the way the share structure and everything like that was a little convoluted because, again, there was not a lot of information back then in regards to how that all worked. And so with that being said, it did open my eyes, because as soon as I started to run out of money and working with partners, it's just like, I can take and own a percentage of a property. I can do all the work. I've got my team already set up in place, and I don't need to qualify for the mortgage. I don't need to bring in the capital. I just need to provide my skills and expertise and my knowledge into the deal to be able to acquire more and more property. And so that's what I've done. And for me, that was where I started off, was more friends and family. And then where it kind of grew from there were actually referrals from friends and family. And then those individuals then would be referring as well. And then just being able to scale the business and being more recognized and starting to doing a lot of networking with other people and just sharing a lot about what I do and just talking about it. And then people are just catching interest in regards to wanting to participate and join in. Because for a lot of people that are just getting started, they may not know where to go. They may not have the knowledge, but they know that they want to get invested in real estate, but they just don't have that skill set or that knowledge. And or even more importantly, the fear. They have the fear factor, just like we talked about at the very beginning, and they don't want to make a costly mistake. So they would rather partner up with somebody like myself to get involved and acquire more properties. So for me, that's how I kind of started to grow the business. And a lot of times when I first began, a lot of that was all personal. That was what it was. But then I started to come to the realization, I set up a company, literally our company called Prosperity Real Estate Investments. And that's where we started to really treat it as a business and bringing in partnerships and looking at more deals. But, the joint venturing side, once you kind of uncover the secrets to joint venturing and learn that, the world becomes your oyster. You can really raise money. You can be buying properties and for a lot of people here, they're just like, I can't find a joint venture partner. I'm struggling with that. And part of it is if it's done right and you really learn how to sell yourself and not the deal. And I'm sure we'll touch on this in a little bit, but the more you become skillful in the mastering of raising capital, your biggest issue won't be finding money. It will actually be finding property. And that's a big issue for a lot of investors that have been doing this a long time. The money part, there are billions and billions of dollars out there that are waiting and looking for opportunities to participate in. And so if you've got deals and opportunities, your job is to really, how do I attract those dollars to come to me? And what do I need to do as a better job in having that money being attracted to the projects that I'm working on? And that's the big thing for a lot of people. It's a big obstacle for a lot of people that are just getting started in raising capital. But the real trick is, it's not about selling the deal. It's about selling yourself. And it took me a while to learn that as well.
So talking about selling yourself, first of all, let's step back here. We're talking about networking. Are you also using social medias these days, or going back to 20 years ago, 15 years ago, where you just in a gathering, you come across friends and families? How did you do that originally?
Yeah, to be honest with you, I talked about real estate all the time, and it wasn't selling real estate. I want to be really clear is, I'll go to a barbecue, hypothetically speaking, be it a friend's event or family event, and I'm meeting a lot of new people. And guess what one of the first questions they're going to ask you? Anybody want to take a guess? They're going to be like, what is it you do, Mike? All right. Or what is it you do, Ashton? And I just really highlighted. And I just, for me, it was really perfecting kind of that. I don't like the terminology of elevator pitch. I don't like that term, but I reference perfecting your introduction, okay, of who you are and what you do. And really, for me, it's just really simple. I'm a real estate investor. I own a company called Prosperity Real Estate Investments. And what I do is acquire investment properties throughout the country and work with partners that are interested in investing in real estate, but don't have the knowledge or the skill set to do so. That's it. I say nothing more. But then what happens is people are like, you do what? And now you start to create this kind of an engagement, and they start to ask questions. And this is not your time to sell. It's just about you sharing a little bit about what you do. And then people just get entrenched into your story and want to know more and want to know more and want to know more. And, I teach a lot of my students the same way, as I'm like, you only give a little bit, and constantly push that away, and don't start selling all of a sudden, and just step back, let them keep engaging. And then what happens is they just want to know, and now they start to really intrigue. But so I started off with barbecues and events and any place that I would go to. And it wasn't ever about selling. It was people always asking about what I did. I would just introduce it and share it, and people were just entrenched. So my kids' hockey practices, hockey games, soccer practices, soccer games, my daughter's ballet events, all the time. People you're meeting constantly all the time. And like we were talking about it as well, networking events. Back then there was a lot of meetups and different things like that was happening. Now in this reality, social media is becoming a huge, huge boon. So, literally meeting people from all over the country and in some cases all over the world these days. And we're connecting in a forum like this. Ashton, thank you for reaching out to me, but I would have never known you or got to meet you if it wasn't for COVID. As you mentioned before, it's kind of a blessing in disguise, because sometimes we would never get a chance to meet people outside of our own small little bubble. And it's been that's the one kind of benefit, is it's opened up our horizons a little bit. So, for me, I always when I talk real estate or looking, I'm not necessarily looking for joint venture partners, but realistically, you just attract them because people are inquiring about what you're doing and what you want. And I just tend to turn the conversation into real estate investing, and people just by osmosis get appealed. Some people will say, you know what, I'm interested. And some people say, well, that sounds interesting. I'm not going to push it much further than that if they don't have no interest. But it's that small percentage that say, I want to know more. That's where I start to kind of engage them further and start to kind of go down that road. So
what do you say? Like, if someone's interested to find out more, what do you say? What is coming after that?
Oh, perfect. That's great. Thanks for asking that. So like for me, say for example, I'm at a hockey game. I'm at my son's practice and this happens, right? They ask and they're just like, Mike, and they just keep digging and digging and digging and digging and digging. I'm like, listen, you know what? This is not the right place to kind of maybe have this discussion about all the details. So why don't we set up a meeting? And I can give you all the answers that you're looking for at that point in time. So I try to I give them a giant carrot, but then at the end of the day, push back and say, let's set up another time. So it's a much more organized fashion versus trying to do it at say, for example, a family event or a barbecue or something like that. It's a very uncomfortable setting to talk about people's personal finances and goals and stuff. So you just give them enough to pique their interest and say, listen, why don't we set up a time? Here's my phone. Let's set up a time right now for next week. We'll meet up at a coffee shop down the road, and then we'll just review it a little bit in some more detail so I can understand a little bit about your investment goals. I'm happy to share a little bit of our investment strategy as well. So I try to take it out of the immediate location as part of the selling. And I don't sell, to be very clear. It's just about engaging the person to have open dialogue to get them to the next step, be it at a coffee shop or a meeting. So.
Excellent. You want to tell us any funny story or something weird happened all along some of this gathering that you remember?
Oh yeah, you know what? The funniest one that I've ever had, to be honest with you, is, I was at a barbecue event actually, and I introduced myself to this particular person, and anyway, I literally had a circle of people around me listening to what we do. Okay. So it was probably somewhere in the area around eight to 10 guys that were there and just getting peppered with a bunch of questions and information. So in a lot of cases, it was almost like I was doing a presentation, and it was very, very unusual because here we are trying to have a barbecue, and here I've got a little semicircle around me of individuals. And like I said, kind of almost doing this presentation without actually trying to approach it. But the funny part to that was, we did set up a meeting, and we actually met as a group. So yet at a restaurant, we set up as a group. So here as a group, we had all these potential investors, like a presentation amongst the group. So it was amazing how that turned out, because most of those people turned out to be joint venture partners shortly after from a barbecue. But it's kind of funny. Sometimes people love talking about real estate, especially right now where real estate prices are crazy. And if you go to any type of an event, everybody's talking about real estate right now. So, yeah.
Now, for these 20 years, I believe originally we were working as full-time somewhere else. And at what point you became 100% like full-time investor and you opened your own company?
Yeah, so that was about in 2007, just before the recession. So at that point, I think we owned, and I can't remember exactly, roughly around 15 properties, roughly in that time frame. So these were all strong, very strong cash flowing properties. I was actually working for a company called Saputo or Dairyland. I'm not sure if
Oh,
anybody's
yes.
familiar with the company, right? So I was a director of sales for Western Canada. So I managed kind of the food service division for Western Canada, and I had a pretty big team of individuals. And it's kind of part of my story, to be honest with you. You know, for me, I was working like 7 a.m. in the morning, at least 7 a.m. in the morning. I'd be in the office, and I would probably be leaving around 6:30, 7 p.m. in the evening. I'd get home, have dinner, kiss the kids goodnight in some cases, and then go to bed, right? And it was exhausting. And then even worse is I used to travel 2.5 to 3 weeks out of every single month as well to boot. And so I was really never home. It wasn't really a very happy kind of environment, but I'll say one thing is I made a lot of money, which was great, but it just wasn't a very happy lifestyle. And this is where I saw real estate as an opportunity. So I know for me, when I started to see the cash flow side there, and it was able to offset a partial of my income and start to really grow. But when I started to kind of get to that 12, 13, 14, 15 properties, literally as soon as I got home for my day, have dinner, then I would do the night shift in a lot of cases, which was my real estate business. And so unfortunately, it became almost like two full-time jobs.
Mhm.
Unfortunately, one actually paid the bills, which was the job, and the other one was not, right? But we were very fortunate at that time where we had some savings in our account. We were very young. Our kids were still quite young at the time. And so we said, you know what, if we're ever going to take a little bit of a leap of faith, let's do it now, right? And if worse comes to worse, I can always get a job somewhere else later on. And so if you ever want motivation, that's the way to do it. You know, if I went to go back and do things a little bit different, I probably wouldn't have left the job so early, because that was roughly around 2007. We all know what happened in 2008, 2009. So right after the recessionary period, which was a very, very challenging time for myself. But it was kind of eyes on the prize and a lot of focus, and there was a lot of growth and a lot of learning that during that particular time. But at the end of the day, we stayed true to what our goals and our vision was, and it was based on acquisitions and finding the right deals, the right projects to continue to grow and build. And so that's really when I left. It did come early. And so I want to be really clear with a lot of people that may be listening and are considering maybe doing this full time. Be really, really cognizant if you're going to go down that road to make sure that your income is covered off, but even more so that there's a very good buffer for yourself just in case things go a little bit awry. Okay. So I get it. Sometimes you hate your job. It sucks. Totally get it. But don't make a big mistake in regards to needing to leave, especially if you're still trying to qualify for mortgages on your own. Because if you don't have a job and you're trying to qualify for a mortgage, the banks are not going to give it to you, just shockingly, right? They won't, it won't happen. So just be understanding of that, and just be really, really prudent and really understanding that if you're going to go down that road, make sure that you are covered off to protect your family and yourself as well. So
Excellent. Very good way of doing it. Now, the reason I ask at what point you move into full-time is to understand your networking. So correct me if I'm wrong, since you're a full-time investor, are you going to say, okay, this week I have to go to, I'm using barbecue as a way of networking, right? So do you have a schedule? Say, okay, this week I am going to have to do 2 barbecues. Next week I have to do 3. Is that the way you set up your day or your week to aim towards that direction where you are right now?
It was in my past, to be honest with you. So, you know, guys, when you're looking at this, Ashton, and everybody that's listening, is if you're going down that road, kind of the road that I went through, and treating it as a business, it is a business. And as part of your business is you're needing to make sales. And so you need to find that money. You need to go out there and start to connect with people that have that capital. So the answer is yes. You know, I found different meetups that I went to, different types of events. If there's some social gatherings or something of that nature, I definitely made myself known and very, very present. In this day and age with social media, believe it or not, it becomes even more accessible because you have the ability to connect with people literally all over the world in some cases, just by reaching out and connecting with these people and networking. There's so many amazing different groups like the one that we're on today that you can meet up and engage with and talk with as well. So for those of you that are just getting started, it's just like, your job is to be raising capital. So your focus needs to be, if you want to buy your next deal and you're out there looking for properties, and I see a lot of this too, is I see a lot of people, instead of putting their time and energy trying to network, connect with people, meet up with people to try to raise money, they should be doing a lot more of that versus starting to look at real estate deals. This is one of the most common mistakes I tend to see. People go out and are looking for deals and looking for properties, putting them under contract, and then are in an absolute desperate state to try to raise the money after the fact. And that's not the right way to do this. The important part is to get the money first before you start and go out and go do some shopping on real estate. And I know that finding the deals, that's the fun part. Analyzing the deals is the fun part. I totally get it. But the reality is you should be kind of going out there focusing on raising capital first. I always use the analogy as, imagine going to Costco knowing that you left your wallet at home. Okay, you left it at home. But here you are, you still go in with the buggy and you're walking around for an hour, putting stuff in the buggy, and it's nice and full, only to get to the cash register and leave. That's kind of what people are doing. And so what's the point? All that time, all that energy, not only wasting your time, but you're wasting the time of the cash register or the cashier. The individual's got to put all the stuff back in its place, knowing that you don't have the capital. So always remember, you do need to spend the time to raise the money first. And that's really where the focus has to be before you start to kind of be looking at deals. So like I said, I can't enforce that one enough. That's a real big one for a lot of people. And I see one of those most common mistakes there. But to go back to your question, Ashton, it's yeah, you know what, you treat this as a business. And you know, for those that are looking to raise capital, that technically should be your priority. If that's where you are needing to be, you know, I would be setting up meetings. I'd be networking like crazy. I would definitely be engaging on different social media platforms. And it's not saying, hey, I've got an opportunity, I'm looking for a joint venture partner. That's not the approach that you need to take. That's not the right approach. And so, you know, I'll kind of maybe enhance this a little bit, Ashton. Maybe I'm going off the little topic here, but I think it's an important one, is that, you know, for those that are looking to raise capital, people are not investing in your deal. And I can't enforce that one enough. They are investing in you. Okay. And it took me a long time to learn that, a really long time to learn that. And when I say that, is if somebody's got $100,000 of cash, the real question that they're asking is, can I trust Ashton or can I trust Mike Ponte with that $100,000? Or is he going to go to Belize? But that's the obstacle and that's the objection that you have to overcome. It doesn't matter that you're generating a 50% return on your investment. At the end of the day, it's a piece of paper. Okay. They need to feel confidence and trust in you. And if they have 100% confidence, I can't enforce this one enough. If they are 100% confident and they trust you 100%, it doesn't matter what the deal is. The property can be in Tuktoyaktuk for all it matters, to be really honest with you, because if they trust you, that's all that matters. And so your job is to be selling yourself, trusting, and making sure that you have clarity to what their goals and their vision is, and to have that synergy between each other. And if you've got that credibility and trust, that's what you are truly selling. It's never the deal. And if for those that are listening for the first time and are hearing this, that's what's going to take you to the next step. But you have to be selling yourself, not the deal. Okay.
Amazing. 100% agree with you. As you said, even like in a direct contact with people, you're not selling yourself. I always say exposing, so they can see what's happening there. If you want to take it, that's fine. If not, that's okay. But as soon as you start selling, that smells, they run away. People, they don't want to sell, they want to buy. So it's for you to find a way to put it in front of them, the way that they say, that's interesting, that's amazing, let's go for it. So they have to come to you, and then they are open. But if you want to do it the other way, it's just being pushy. No one's like to be pushed to do something.
Absolutely. Yeah, like I got a little bit of a reverse psychology in here. This is going to be kind of maybe mind-blowing for some people. But the reality is I treat a joint venture discussion with a potential partner very differently. I'm not necessarily looking for their money. I may not even want their money, to be really honest with you. And so when I meet them and interview them, the keyword is interview them, I want to see if they have if I want to actually work with that money partner so they can give me their money. Okay. I don't always accept joint venture money because I don't want to work with that person. So as they're trying to learn more about you, I need to do the same thing in return. So my question is, I will literally refuse money, and I don't care how much money they have, to be really honest with you, is if I don't feel that there's a compatibility, common goals, and I trust those individuals, I don't feel that trust on the other side, I will definitely turn down that money. It's going to sound strange, but the reality is that's the way it needs to be treated. This is your business. This is your real estate investing business. And these individuals are a part of your team, your money partners. There's got to be a collaboration, but your joint venture relationship is almost like a marriage in some cases. And Ashton, I appreciate your comments at the beginning was like, I'm a long-term buy and holder. So am I. So if I'm going to be married to these guys for 3, 4, 5 years, guys or girls, 3, 4, 5 years, am I able to work with these people for the next 4 to 5 years? Do I see some commonality behind there? And if I start to get my spider senses tingling and I'm like, I don't know about if that's the right fit or not, I'll say no. And so, it's not about selling, to your point. It really isn't. It should be almost a relationship of commonality where everything kind of sinks in place, like, a boyfriend or girlfriend, or almost a marriage where everything just tends to work out appropriately. And it's not about selling. It really is about commonality in a lot of cases. And if you can have those relationships and have those discussions with those potential joint venture partners, and you find the right fit for yourself, that partner will probably do multiple deals with you. And they will also surround themselves, and they have friends and family that are very similar in personality types and traits that will be wanting to work with you as well.
Excellent. Michael, you're getting very close to 8 o'clock now. No, that's amazing. What you say is, I really appreciate it. And that's bang on raising capital. It's not a question of finding the money and buy property. There's more into that psychology, as you said. I know you have 20 years experience dealing with raising capital is only one part of real estate. Also choosing different real estate properties, the neighborhood, the kind of money you want to put, 10%, 20%, etc. Your positive cash flow, your growth, calculating your growth, neighborhood, exit plan, all of this. I think that would take us to next time when we get together. Maybe within the next few weeks, I'm going to call you back and said,
sure.
Michael, is your second round, come in and help us here.
Love to.
Now, before I finish this session, I want to ask 2 questions. What kind of books can you, like, if you have any favorite book that you have in mind, you started, you're interested, you can suggest to us?
Favorite books. Let me see. There's so many. And you stumped me on this one, so because I've got a couple that I am just going to pull up right now, just off the top of my head. The first one, and I guess maybe to get started for the individuals, the anything from Don Campbell from Rain. I don't know if anybody's familiar with Rain, but honestly, his whole the Rain group, I'll have to give him credit where it's due. They've done an amazing job with a lot of real estate knowledge in regards to a lot of their books. They've done a really good job. The other one that is a big one for me, and especially for those that are getting started, and it's a great book I read actually kind of every single year, is Start With Why with Simon Sinek as well. And it's another great book, and it's really about getting clarity to your why. And, at the end of the day, why are you doing this? What's the point? Real estate is just a vehicle to an objection that you want to achieve. So and it's having that clarity. And I always say, imagine driving down to Mexico without a GPS. You're going to have a roadmap. How long is it going to take you? What hotels are you going to stay to kind of get there? All that stuff. You need to know what the destination is, or else you're just going to be driving all over the place with no objective. And so have clarity to that first. But those are two. That's one book. Start with Why. Simon Sinek is a great book. There's so many different books, but and then I'm going to probably recommend anything from Don Campbell, the Canadian Real Estate Investment. I can't remember the exact name of it, but anything from Don Campbell's books have been great.
Yeah, a few books, and as always he said on stage, because apparently we have a Dan Campbell in the US somewhere. He always said Dan R. Campbell. So if you Google his name, just make sure he's Dan R. Campbell. Yes. I read a few of his books. It's amazing. It's great. The second question I have for you here is, what kind of advice do you have for real estate investors that are thinking of getting into not only raising capital, but continuing being encouraged into this field?
Into raising capital, just real estate as a whole, or?
Real estate as well.
Yeah, I think the thing that I'm going to probably give us some advice, don't stop learning. It's a big one. Like, you know what? I'm learning every single day. It's like doing this for 20 years, you think you'd know everything, and don't be ignorant that you think you do, because you don't. As everybody's well aware, the market is always changing. Things are always changing. New strategies, new systems, new ways to improve the way you do your business. And don't be afraid, like continuing to learn, but that shouldn't stop you from actually doing, to be very clear. You shouldn't be just learning and learning and learning and doing nothing. Take action. Continue to learn, take action, continue to learn, and that's the evolution. But being in events like this, Ashton, thank you for hosting this. This is fantastic. I'm sure a lot of your guests are finding value, I hope. But at the same time, this is where you want to be involved in these types of platforms and environments, so you can continue to educate yourself to be better and to get better, be better, and continuing to scale your business. And like I said, don't let education just hold you back. Continue to take action, but make sure you back that up with a lot of learning as well.
Going back to your the title of the book, Start with Why. I've seen many investors, this is all they thinking, let's find a joint venture. No. Let's buy a house or buy many homes. No. Go back to your why. Because once you buy your first home, or if you cannot find your joint venture, you're disappointed. But if you have your big why sitting and staring at you every single day, then you go for it. Excellent.
Absolutely. Absolutely.
Listen, Michael, it was a pleasure, absolute pleasure to have you over. Thank you very much for sharing your knowledge and your time with us, and look forward to see you in the next few weeks. And you're sitting here and waiting to learn more about you.
Great. Thank you for the opportunity. Thank you for the time. And I hope you guys all enjoyed it. Thank you.
Before we go, I just came to my mind. Do you have a phone number, email address, website that people can contact you and learn from you?
Definitely. I'm going to do a personal invite to our group. I hope you don't mind me sharing this, but we have a Facebook group called Savvy Investor, SAVV Investor. Just take a look. But we have a lot of training sessions, and it's a great forum to connect with other individuals. You can definitely jump on there and say hello. If you want to email me, you can email me at mponte, P-O-N-T-E, mponte, P-O-N-T-E, at prosperityinvestments.ca, prosperityinvestments.ca. Be happy to chat with you. Or if you want to call me, 604-518-0662.
Excellent, Michael. It was a pleasure to have you here, and I look forward to see you again, and have a great, great day.
You too. Thanks, Ashton. Appreciate it.
Yeah, bye-bye.